Now let us go to question 2, which is a different way to asking the same thing. And I'm just giving you a different perspective of how they can ask this. So we have Lady Do Limited is a company that sells digital music at a markup of 150% on cost. And we have pre-adjustment trial balance for the year ended 29th of February 2024. We've got sales, we've got cost of sales, we've got debtors allowances. Immediately when you see debtors allowances, that is in the pre-adjustment trial balance, remember what you need to do. You need to immediately subtract it from sales, and that's a mark. Everything has been entered for you, so you don't need to enter anything from the pre-adjustment trial balance. Let's go straight to, so I see rent there is 257,000. I see insurance is 340,000. The first one says Lady Do Limited issued an invoice for 187,500 to a debtor, A. Kathrada. The bookkeeper kept the invoice in a drawer and forgot to record it. Note that when you issue an invoice as a company, it means that you sold goods on credit. Again, it affects 4 accounts. And we discussed this in the previous video. So the sale of goods will affect these 4 accounts over there. We debit debtors control. So debtors control or trade debtors increases. At the same time, sales will increase. With the selling price of those goods that we sold, we are going to add that 187,500 to sales and then add it to debtors control. And you'll find debtors control in trade and other receivables. Okay, I don't know where that comes from. I will record it in trade and other receivables, and I'll just add it because it increases what the debtor is owing us. At the same time, we now need to calculate the cost price of those goods. Please note that the markup was 150%. So if you're given the selling price and you want to calculate the cost price, you will take that 187,500 multiplied by 100 and divided by 100 plus the markup, and that will give you 250. So it is 187,500. Multiply that by 100 divided by 250. So it's 187,500 multiplied by 100 divided by 250. It'll give you the cost price, which is 75,000. Now, that 75,000, we are going to increase cost of sales with the 75,000. Remember, cost of sales increases whenever we sell goods. And it'll also decrease trading stock. It'll decrease trading stock. And that is because it is taken from trading stock straight to cost of sales. So it's just trading stock converted into an expense, which is cost of sales. Hence, you are de-recognizing 75,000 of your asset and you're recognizing it as an expense, which is cost of sales. Recording this in the statement of profit or loss, you are going to increase cost of sales by 75,000 Rand. At the same time, you will reduce trading stock. So if we had trading stock in the pre-adjustment trial balance, you are going to take that trading stock and decrease it by 75,000. That's it for A. Now we have B. B says rent for February 2024 was received. Rent increased by 800 on the 1st of September 2023. Rent for February was not received. That means that 257,000, this 257,000 here, it is rent for 11 months. And that is so because rent for February was not received. Now, for me to find rent for February, I could just take that 257,000 and divide it by 11, but I can't do that because there was an increase, a rent increase on the 1st of September 2023. That one requires you to draw the number line, and this will be your number line. It starts on the 1st of March 2023 and it ends on the 28th of February 2024. I highlighted that February in blue just to indicate that rent for February was not received. So this is our 12 months. We need to recognize income for that reporting period, which is 12 months. But now there was an increase of rent on the 1st of September. Just want to confirm that it's the 1st of September. That is correct. Meaning that the month of September will also include the increased rent amount, which is 800 plus the 800. Now, the most important question we need to ask ourselves is how much was rent before September? So for 1, 2, 3, 4, 5, 6, for those 6 months, how much was rent? We don't know. It was X for 6 months. And since it was X for 6 months, you'll write it as 6X. And for the next 1, 2, which is September, October, November, December, January, for the next 5 months, it will be X plus 800 rand because it increased by 800 rand. Note that here it's not increasing by a percentage. It is actually increasing by an actual value, which is 800. So you add to X and then you times that by 5. That will be equal to 257,000. 5 plus 6 will give you 11 months, meaning that we are missing 1 month, which is the month of February, and that month is within the reporting period. So rent for February, even though it was not received, we still need to record it as income because we've earned it. We provided accommodation. It's just that the tenant has not yet paid us. An accrual basis allows us to recognize that rent that we have earned as income. Now break the brackets. When you break these brackets, you will just say 5 times X, then 5 times 800. And you will get 6X plus 5X plus 4,000 is equals to 257,000. Transpose 4,000 to the other side, you'll be left with 11X on the left-hand side. On the right-hand side, you will have 257 minus 4,000. That will give you 253. When you divide it by 11, it will give you 23,000. So meaning that rent was 23,000 from March until end of August. But from August, every month, I mean, from September, every month it was 23,800. And that is the 23,800 we want for February. That rent for February must be included in the current financial year. So 23,800 for February must be included in the current financial year because it is still outstanding, but we have earned it. So rent was 23,000 until August, and then from September it became 23,800. Okay, this started in September, by the way. And that's it, guys. That is it. So what must I do with this 23,000 rand? I am going to increase my rent by that 23,000 rand because it falls within the current financial year. I've earned it. So increase rent by that 23,000 rand. At the same time, that 23,000 rand, it represents what is owed to us by the tenant. And anything that is owed to us will be recorded in trade and other receivables. And we are going to record this as accrued income. And our accrued income in trade and other receivables will be that 23,800. Last one. Then it says on the 1st of December 2023, the entity paid an insurance amount of 85,000 for 8 months. This transaction was not recorded. Geez. So that was not recorded. You have to be very careful when you record this. The fact that they said that it was paid on the 1st of December, but it was not recorded. It means that that 340,000 does not include the 85,000 rand. Because even though it was paid, it was not recorded. Now, the fact that this transaction, as I've said, and I'm going to say it again, it was not recorded. I'm going to quickly draw my timeline. Which runs from 1 March to the 28th of February 2024. We paid this in December for December, January, and February, which will cover us only 3 months of that 85,000 all within the current financial year. The other 5 months fall outside the financial year. And remember, this 85,000 was for only a period of 8 months. Okay, just want to make sure that everything is correct here. And I'm going to firstly calculate part of the insurance amount. Note that this 85,000 rand, it is not included in that 340,000 rand. It is not included. So don't act as though it has been included. It is not included. And the fact that it's not included, we need to now calculate the part that must be included, that must be added to that 340,000. The part that must be added to that 340,000 will be the 3 out of 8, which falls within the current financial year. Okay, the 5 out of 8 must be recorded as prepaid expense. You do not subtract it from the insurance because, first of all, that 85,000 rand was never included in the 340. So do not subtract the 53,125 from the 340 because the 85 was never included in that 340,000 rand. So what needs to be included will be the 3 of the 8, and that will give us 31,875. That is our insurance expense and must be included as such in the current financial year. We are going to take the 38,175 and simply add it to insurance, which will give us our total insurance amount of 371,875. And the 5 out of 8 will be recorded in trade and other receivables. And that is because we have prepaid it. So it qualifies to be a current asset. The total will be 964,425. And then I'll just add up my statement of profit or loss. For sales, this is what I will get. For cost of sales, put it in brackets, which is 8,575,000. Sales minus cost of sales will give you a gross profit of 12,607,500. That is it with respect to this question. It was very interesting, as a matter of fact. Let us get to another question. This is a full-blown question. Um, yeah. We'll be serving some beef here, where we have Drake Limited is a company that sells goods at a markup of 50% on cost. And we've got a pre-adjustment trial balance there. And this is what we have as a pre-adjustment trial balance. The first one, Drake sold something to Kendrick Lamar there. Yeah, it's a hot beef there. And they telling you 80% of the commission included in the insurance amount is 25%, which was paid to Outcall. Yeah, Outcall decided to stay out of it. Outsurance right there. And yeah, this is what we've got. Try it out. So this will be, it was actually a very, very nice question. This is what, if I was to set a grade 10 paper, I will include something like this. It's missing the juicy part, which is depreciation. But it's fine. I think it's fine. It's missing depreciation. It's missing where we claim an insurance, lost items. That's what I will include as well. But I will set another paper just to include those. So be on the lookout as I'll be posting more videos in days to come. We need to use all of that information to prepare the statement of profit or loss for Drake Limited. Okay. I took questions from past papers, obviously. It's mixed masala, it's made up of questions from past papers. But I made them grade 10 friendly. So I took DBE papers for November 2022 and 2020 and I mixed them up. And that's how I came up with this paper over here. So you need to prepare the full income statement or statement of profit or loss, including, okay, why is it showing solutions now? All right, this is another part that you have to prepare. Then you'll prepare trade and other receivables, as well as trade and other payables. Okay, this is a full-blown question. So you need to stick to the time limit. You need to do it within 5. It's actually 36 minutes, so you need to do it within 36 minutes. Try it out because this will be the best test, all right, to check if you were paying attention when I was explaining the previous two videos, including this video. So try it out, give yourself 36 minutes and give it a shot. All right. All right, guys, try it out, try it out, try it out. And thank you for watching more videos to come. Hoto.